Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, April 24th, 2022. Markets are opening a little bit lower, and that's after an initial attempt to get themselves back above 13,332, which was support on the way down, now presenting some resistance, trying to get back above. And a little too early, way too early. The market's been open for 8 minutes as to determine direction or anything else. So I'm just going to dive right in and add my thoughts from Friday and moving forward. So bigger picture, folks, has not changed. Again, no changes to make there. So I'm going to go down right away. We're still in, I believe, an intermediate degree decline to form wave A on a primary degree level. Okay, so this A wave of an intermediate degree, in my opinion, is showing up to be hopefully be a 1, 2, 3, 4, 5, which is 5 waves of intermediate degree. The alternate view, still as strong, would be an ABC down to form primary wave A. Either way, I'm looking for a larger degree drop. So now I'm going to go down to the hourly chart. No other changes outside of that. We are still in a decline, and I am still looking for, more than likely as a minimum, the March 2020 lows at some point. And what I'm hearing elsewhere, well, I'll talk about it. Sorry, I don't mean to jump the gun here. So anyway, going down to the hourly chart, Friday's trade was very strong and very strongly, very strongly down. And so here we have Thursday going into Friday, and we are opening right there within this bar. And we actually rallied to the high, and the selling just lasted all day long. Okay, that's the opening bar. So there's 1, 2, 3, 4, 5, 6. After hours as well, but 6 takes you to the close. And it was all pretty much down. So again, another easy day for trading once it became even more clear than it was on Thursday. And much earlier in the day, since it was from the opening, so it beat it by like a half hour, the market continued to decline. So as far as trading, it was a very profitable day. It was a good day, but I don't want to rely on this now happening more consistently, because what it does, it changes our mindset, and our mindset has to be focused on price action, whether that price action is going up or down. So we can't, what kind of becomes a little bit more elastic is expectations. And I'll explain why right now. You can have an expectation that the market's oversold, it's broken with some resistance, we need a bounce. We've been oversold now for an hour and a half, again, because we trade on a 1, a 2, and a 5 minute chart. So if something's been developing for an hour and a half and still hasn't happened, you're looking for it even more. You'll be looking for the rally in this case. You got to bounce, even if you're looking for a 10 or 20 point bounce. And in the NASDAQ, that's a blink still. So you're getting long and they're not coming through. Then you kind of got to go with, the sellers have the upper hand here today for whatever their reasons are. It's now filtered high enough that they're all following through together. So we're not having one big blowout by some large firm while the others stand and kind of go like, okay, and they continue to buy it. This is more an across the board type selling that at least I feel that we're seeing. And particularly in the NASDAQ, of course, that is in the high-tech stocks. It's in technology sector. And it also represented more to me as to what positions, now we're traders, so what positions are really being affected. And because I'm an ex-market maker, an options trader, I immediately go to the options and I'm dealing with strike prices, and you're dealing with where the money flow is kind of going in and what what these are larger firms and larger trading firms may be looking for. So as I said on Thursday, we ran the probability of getting that bounce, which would have just, in this case, been a wave 2, maybe. That we had the potential for a bounce to go much higher than it actually attempted to do. But in any case, that break, again, puts all of that back together in terms of, well, they may have been looking for an upside. They're not getting it. They have to. And now these stocks are beginning to sell off. And as I stated, when they start flying through strike prices more quickly than what people would have anticipated, you can watch premium absolutely evaporate. And I mean evaporate like, you know, you had sun at 120 degrees onto a sidewalk or a road, which is dark, and suddenly a cloud comes over, it drops some rain, it gives enough to get it a little bit wet, but then all really it's just steam. It's just steam. So things change. And the steam is the evaporation of the premium. When the market realizes, when traders realize, and suddenly their position is screaming, hello, we're dying, then it's time to make change. And a lot of that is selling the underlying. And that's what we saw. In any case, it could be, and I do believe, I also made reference to the Elliott continues to suggest that next week's not going to be very nice. In fact, we have to include, and I'm not joking, we have to include that we could double down and go down twice as much to finish maybe some of the internals in this third wave. We're in a minor third of an intermediate third, right? So we're on a minute level. And minutely, we've got minute 1 and 2 in, and that minute 3 is breaking down. And out of that, we got 1, 2, and maybe part of 3. So, and what I mean is here, minor 3, that's what's in force. We're on a minute level, minute 1, minute 2. Then we start in that minute third wave, and it subdivides. Remember, I said these larger third waves they're all expected to do 5 waves of minor degree, and they will subdivide. Well, here we are in a minor third, and it is subdividing. And because they're building blocks, we may get additional subdivisions going down. That is the strength that may come in because the direction is down. So I'm looking at what action we could possibly get going down. We may get it, and it may drop out of control. That's how it will feel because the sellers are relentless. They're just doing it. But don't forget, 13,000, you got to go back and look and see how long has it been above 13,000. But a lot has changed hands. Amazon, how much changed hands above 3,000? Well, it lost, got itself back down there pretty dang quick. Apple, this thing was trading up about at 165, heading for 167. Look, okay, you're still going to get it. No. In fact, it went through 165, 162.50, and headed for 160. If they had more time, it would have been there. Okay, so what can we get? 1, 2, 1, 2. So we're in the sub-minute wave 3 of the minute wave 3 of the minor wave 3 of the, so we're in a bunch of 3s. Strongest part of the move, point of recognition, 3 of 3 of 3 of 3, and so on and so forth. We're there. So the market can be driven lower. I cannot and have no idea because there's just too much out there to choose from on what could trigger a heavy duty slide. Right now, bonds are unchanged, but I bet you they're hanging on by the hair of their chinny chin chin, as they say. So, it could get ugly and it could be real fast. It just depends. We got 2 full continent markets to go. We got the Asian markets, and then we got the European markets, and then it rolls back to the US. We shall see, but be prepared. So same thing stands. Am I looking for a bounce? Yeah. RSI is telling me we should get a bounce. In fact, it is starting to turn ever so slightly on the hourly. But a bounce, I believe, again, I'm not going to start throwing up fibs. It's going to get all clouded. But we have a fib, which gives us to the downside support. Okay. Now, let's start from there. Basically, our next move, and as I said again on Thursday, we're watching the moving averages, everything now. Look at that. Before on Thursday, it was almost there, but not quite. It's there now because we were up here. Then we went into Thursday. Then we went into Friday. So moving averages, they're all continuing to point down. Even the 200 still not flat, but not with this steepness or the velocity that like the 8 and the 20 are now headed, and the 50 is not far behind. So I think if we had another strong down day tomorrow, it's going to pull these moving averages with it. And that continues to support the move. So remember, when you're trading technically and you're trying to program all of this, if, then, do. So in other words, it's a bunch of statements that are put into an algorithm that are giving it the givens. And if those givens technically, and a lot of them are moving averages, continue to adhere or continue to produce the same trade, my guess is going to be it's going to be down. Now we have supported 13,197. When I was talking last, I had said if the market breaks below 13,513 with some little bit of power and follows, this is the next step. This is where it'll go. We were up here when it was all going on, but when it came down and it broke it, I was like, wow, okay. So we got that bounce right in there. Again, I'm going to go down one so you all can see it. This is how you would try to interpret this. Now, again, no guarantee, but here we are. We come down. We're now that close to it, and it's going to try and bounce. Playable bounce, but when it failed to break back above 513, your next clue is like, it's going to die. And it did. Right into the bell. So that was a good trade, and that's how you read the market as it's going through, because you can see now, but these were different at that time. They had a whole 2 hours more. So things change, and you just read your price action via the signal givers that you have, which are the moving averages, RSI, Fibonacci, of course, and Elliott. Again, reviewing real quick for tomorrow. Come on, what does it do? See what it does that? I'm not sure what I'm doing, like maybe I'm going too fast. We must allow for bounces. We have the 8. This is for today, right now, as trading goes on. We have an 8 at 13,448. We have resistance now at 13,513.14, with the 20 at 13,567. I would think, with the heaviness of the last 2 days, that they're not going to be real quick without something to really give them that extra, yep, here's our reason, bounce. We don't get much higher than 567. I think maybe they might be able to push it to 13,750-ish. But again, I'm looking at the 50, and I'm looking at these should be holding. They should be stopping. This is not, we're not out of the woods by any means, folks. We're not out of the woods. If you're trading and you're going to step in and buy it, it's because you're a day trader. You might have a good deal on some options. You've got, a reason to step and buy what you're buying. But outside of that, no, the market's not getting bullish. That's my take. Even today, the market is not getting bullish. They're just holding it right at that resistance support level. And the buyers will step in because they don't mind. They're probably short from way up here, and they're just going to get flat, whatever. I don't see a lot of trading going on. And it tends to be more to the downside. Okay, I am going to leave it there. So both sides, I'm leaning towards a bigger picture that the Elliott's going to follow through. for that to happen, Amazon, Apple, Facebook, Google, Microsoft, they've got to go. If they report earnings that are acceptable by the market, it likely will turn into a Tesla situation. They all thought Tesla belonged back at 1100. They gave it the good old college try, and then, well, not even going to happen. 70 is not going to happen. 50 is not going to happen, et cetera, on down. Closed at 1,005. And that was the battle. That was a battle to keep it above 1,000. So Tesla earnings, yeah, thanks, boom. They're still taking profit. It's not because Tesla's bad. It's not because they don't believe in Tesla's earnings. It's the economy. It's inflation. It's interest rates. So regardless of the BS that you're going to hear coming out on Tesla, the nuts that people start talking about, it's like, you're in it for the long haul. Why would, in God's name, would you want to sit through and watch something lose 20, 30, 40, 50% of its value because you're in it for the long haul? Hey, I'll get out now, take my profit. I'll be back. If what you say is really going to happen, oh, sure, I don't need to sit it out. I will come back and reinvest. So that's how I'm going to present that side. Think, yeah, you might be in it for the long haul, but why do you want to not play this move? Anyway, next update, it will be on Monday, the 25th.